Preparing for a commercial banking at Commercial Bank of Qatar interview? You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Why do you want to work for Commercial Bank of Qatar? Commercial Bank of Qatar appeals to me because it combines a strong local franchise with digital banking ambition and exposure to Qatar's corporate growth story. I would position my answer around 3 points: the bank's reputation in corporate and retail banking, its focus on customer experience, and the chance to build disciplined credit and relationship skills in a competitive market. I would also connect my background directly to the role's targets and service standards. While answering, focus on the bank's Qatar franchise, corporate and retail presence, digital banking focus, customer service culture, and how your skills match the specific role and market. Question 2. How would you assess whether a corporate client should receive a loan? I would start with repayment capacity, not collateral. First, I would understand the company's business model, revenue drivers, customer concentration, and industry risks. Then I would analyze audited financials, cash flow, leverage, debt service coverage, and working capital needs. I would also review account behavior, existing facilities, collateral quality, and management reputation. If the numbers support sustainable repayment and the risk fits policy, I would recommend appropriate limits, covenants, and monitoring triggers. Make sure to cover the client's business model, cash flow strength, repayment capacity, collateral, leverage, industry outlook, management quality, account conduct, and compliance with bank credit policy. Question 3. What are the key risks Commercial Bank of Qatar faces in corporate banking? The biggest risk in corporate banking is usually credit risk. The borrower may not repay on time or in full. For a Qatar-based bank, I would also watch sector concentration, especially real estate, contracting, trading, and government-linked projects. Liquidity and interest rate risk matter because funding costs can move quickly. Operational and compliance risks are also critical. A strong answer should show that risk is managed through underwriting, limits, diversification, covenants, and ongoing relationship monitoring. In your answer, talk about credit risk, concentration risk, liquidity risk, interest rate risk, operational risk, regulatory risk, and exposure to Qatar's economic cycles and major sectors. Question 4. How do you handle an angry retail banking customer at a branch or call center? I would first let the customer explain the issue without interruption, because many complaints escalate when people feel ignored. Then I would acknowledge the concern, verify the account details, and identify whether it is a transaction error, service delay, fee dispute, or misunderstanding. I would explain what I can do within policy, give a realistic timeline, and escalate if required. My goal is to solve the issue professionally while protecting the bank's controls and reputation. Be sure to mention listening calmly, acknowledging the issue, verifying facts, following bank policy, escalating when needed, documenting the case, and preserving customer trust. Question 5. What do you understand by KYC and why is it important in a Qatari bank? KYC means knowing who the customer is, why they need banking services, and whether their funds and activities make sense. In Qatar, this is essential for AML, counter-terrorist financing, sanctions screening, and Qatar central bank compliance. I would verify identity, beneficial ownership, source of funds, expected transaction behavior, and customer risk rating. KYC is not a one-time form. It continues through periodic reviews, transaction monitoring, and escalation of suspicious activity. While answering, focus on customer identification, beneficial ownership, source of funds, risk rating, ongoing monitoring, Qatar central bank expectations, AML controls, and sanctions compliance. Question 6. How would you cross-sell products without damaging the customer relationship? Good cross-selling starts with understanding the customer, not pushing products. If a salary account customer frequently travels, a credit card with travel benefits may be relevant. If an SME has seasonal cash gaps, working capital finance may help. I would ask questions, identify a real need, Explain benefits and costs clearly, and ensure suitability. The best sales approach protects trust because a satisfied customer is more likely to deepen the relationship over time. Make sure to cover needs-based selling, customer segmentation, suitability, timing, product knowledge, transparency on fees, long-term relationship value, and avoiding aggressive or irrelevant sales behavior. Question 7. Explain the difference between current accounts, savings accounts, and fixed deposits. A current account is mainly for frequent transactions, often used by businesses and professionals, and usually offers high liquidity with limited or no interest. A savings account is for individuals who want liquidity plus modest returns. A fixed deposit locks funds for a set period and generally pays a higher return because the bank receives more stable funding. For the bank, these products are important because they influence deposit mix, funding cost, and customer engagement. In your answer, compare purpose, liquidity, interest or profit features, transaction frequency, customer type, pricing impact for the bank, and how each product supports relationship banking. Question 8. If a customer's account shows unusual transactions, what would you do? I would not confront the customer or make assumptions. First, I would compare the transactions with the customer's KYC profile, expected activity, occupation, business purpose, and historical account behavior. If the activity appears unusual or lacks economic rationale, I would document the facts and escalate through the bank's AML or compliance process. It is important not to tip off the customer. The role of frontline staff is to identify red flags and follow procedure. Be sure to mention comparing activity to customer profile, avoiding customer tipping off, documenting observations, escalating to compliance, following AML procedures, and not making unsupported accusations. Question 9. What financial ratios would you review before recommending a business loan? I would focus on ratios that show repayment ability and balance sheet resilience. Liquidity ratios such as current ratio show short-term capacity. Leverage indicates how much debt the business already carries. Interest coverage and debt service coverage are crucial because they connect earnings and cash flow to obligations. I would also review gross margin, net margin, receivable days, inventory days, and cash conversion cycle. Trends matter more than a single year's ratio. While answering, focus on liquidity ratios, leverage, interest coverage, debt service coverage, profitability margins, cash conversion cycle, receivables quality, and trends, rather than one-year numbers. Question 10. How would you prioritize tasks in a high-volume banking operations role? In banking operations, I would prioritize by risk, deadline, and customer impact. Items linked to payment cutoffs, regulatory reporting, account blocking, or high-value transactions come first because delays can create financial or compliance risk. I would use checklists, maker-checker controls, and clear tracking to avoid errors. If volumes spike, I would communicate early, escalate bottlenecks, and support the team. Speed matters, but accuracy and control are non-negotiable in a bank. Make sure to cover risk-based prioritization, cutoff times, regulatory deadlines, customer impact, accuracy, reconciliation, escalation, teamwork, and maintaining controls under pressure. Question 11. What does excellent customer service mean in banking? Excellent banking service means solving the customer's need quickly, accurately, and securely. A friendly tone is important, but it is not enough. The customer expects correct information, confidentiality, clear timelines, and ownership of the issue. For example, if a card dispute is raised, I should explain the process, required documents, expected resolution time, and next steps. Strong service reduces complaints, improves retention, and creates opportunities for deeper banking relationships. In your answer, talk about responsiveness, accuracy, confidentiality, empathy, product knowledge, clear communication, complaint handling, regulatory discipline, and turning service into long-term customer loyalty. Question 12. How would you explain net interest margin in simple terms? Net interest margin is the spread a bank earns from its core lending and funding activity. In simple terms, if the bank lends at 6% and pays 2% on deposits, the difference helps generate income. Technically, NIM is net interest income divided by average earning assets. It is affected by loan pricing, deposit mix, funding cost, competition, and interest rate movements. For commercial banks, NIM is a key driver of profitability. Be sure to mention interest earned on loans and investments, interest paid on deposits and borrowings, average earning assets, pricing discipline, funding cost, and bank profitability. Question 13. Tell me about a time you worked under pressure and maintained accuracy. I would answer this with a specific star example. In one reporting deadline situation, several reconciliations had to be completed the same day while new queries kept coming in. I listed tasks by deadline and risk, completed high-impact items first, and used a checklist to avoid missing supporting documents. I also updated my manager before delays became issues. The result was timely submission with no material errors, which shows both composure and controlled discipline. While answering, use a structured star example. Show the pressure source, controls you used, how you avoided mistakes, communication with stakeholders, and the measurable result. Question 14. How do interest rate changes affect a commercial bank like Commercial Bank of Qatar? Interest rate changes affect both income and customer behavior. When rates rise, floating rate loan yields may increase, supporting revenue. But deposit costs can also rise, and borrowers may face affordability pressure. Loan demand may slow, and credit risk can increase for highly leveraged customers. When rates fall, margins may compress if asset yields reprice faster than funding costs. A bank manages this through pricing, duration gaps, treasury hedging, and careful asset liability management. Make sure to cover asset yields, deposit costs, loan demand, net interest margin, fixed versus floating rate exposure, customer affordability, treasury management, and balance sheet repricing. Question 15. If selected, how would you add value in your first 90 days at Commercial Bank of Qatar? In my first 90 days, I would focus on learning the bank's products, systems, policies, and service standards quickly. I would build relationships with my manager, team, operations, compliance, and support units because banking work depends on coordination. I would aim to be reliable on basics, accurate documentation, timely follow-up, clean communication, and respect for controls. Once I understand the workflow, I would look for practical ways to improve customer turnaround and team efficiency. In your answer, talk about learning bank policies, understanding products, building stakeholder relationships, meeting service or sales targets, following controls, and contributing with reliability and initiative. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.